Bull Bear Buzz podcast for decoding markets, fueling minds.
Welcome to the Deep Dive. Our mission, as always, is pretty simple. Take the latest info dump and really pull out the insights you need.
Get straight to the point, basically.
Exactly. And today we're digging into India's industrial pulse. We've got the new Index of Industrial Production, the IIP, for March 2025.
Fresh off the press from the Ministry of Statistics.
Right. We have the release and also a chart, a visual that helps see the trend.
So we can actually picture what's happening.
Our goal for you listening, get a really clear, concise handle on the latest industrial output trends. Cut through the numbers, see what's significant.
Yeah, think of it as your snapshot of the industrial scene right now. We'll unpack what it all means.
Okay, let's jump in. The headline number. IIP growth for March 2025 is 3.0%.
Which is interesting because it's actually a tiny bit higher than the first estimate for February, which was 2.9%.
Yeah, a little upward nudge there. And if we look year on year, the March index is 164.8. compared to 160.0 back in March 2024. So still showing growth compared to last year.
Right. And that small revision for February, what does that suggest?
Good question. I mean, these first estimates are always, estimates, right?
Exactly. Quick estimates, they get firmed up later.
So the fact February got nudged up might mean things were perhaps a tiny bit stronger than they first thought.
Could be. Maybe a bit more underlying momentum going into March than the initial data suggested. It happens.
And we have that visual, the chart showing the trend over the last year. You can see the bars for each month's index value.
And that orange line showing the year-on-year growth rate.
Yeah, so March 2025 is sitting there at a 164.8. How does it fit into the bigger picture, looking at that chart?
Well, you see the ups and downs, right? The general direction. March seems like a continuation of moderate growth.
Not setting the world on fire, but not falling off a cliff either.
Pretty much.
Yeah.
Maybe building slightly on that revised February number. It suggests the sector's ticking along, not exactly booming, but definitely not stagnant.
Okay, let's break it down by sector. The nitty-gritty. Mining growth was pretty low, just 0.4% in March.
Yeah, quite subdued.
Manufacturing did better, 3.8% growth.
That carries a lot of weight in the IIP.
And electricity really surged. 6.3% increase.
That's quite strong.
The actual index levels for March were mining 156.8, manufacturing 160.9, and electricity way up at 215.1.
That electricity figure really jumps out.
What do you make of that?
Well, it probably reflects pretty solid demand, maybe more economic activity, generally needing power. Could also be better supply, better generation perhaps.
And the low mining number?
Could be anything, really. Global prices, maybe specific domestic demand issues, production constraints. Hard to say from just this number.
But manufacturing at 3.0%, that's the core, isn't it? Driving the overall positive figure.
Absolutely key. And what's interesting there, digging deeper.
Yeah.
Within manufacturing, they look at these different industry groups, right? The NIC two-digit level.
Right, 23 of them in total.
And 13 out of those 23 actually showed positive growth in March.
Okay, so it wasn't just one or two specific things pulling everything up. It was broader than that.
Exactly. That's generally a healthier sign. Suggest resilience across different parts of manufacturing, not just relying on a couple of stars.
Speaking of stars, who are the leaders in March? The top three contributors?
Okay, number one, manufacture of basic metals. That grew 6.9%. Then manufacture of motor vehicles, trailers, and semi-trailers. Big one, 10.3% growth.
Wow.
And the third was manufacture of electrical equipment, which is really flying at 15.7%.
15.7, that's huge. Okay, let's unpack those. Basic metals, 6.9%. What's driving that? They mentioned things like alloy steel flat products, steel pipes, mild steel bars.
Sounds like construction and infrastructure inputs, doesn't it?
Yeah, exactly. Ongoing infra projects, maybe private construction too.
It shows how these sectors are linked. Demand for buildings and roads pulls demand for steel.
Makes sense. Then motor vehicles, 10.3% growth, driven by auto components, spares, axles, truck bodies.
Components and commercial vehicle parts. That suggests maybe continued demand for new vehicles, both cars and trucks.
Or maybe just keeping the existing ones running, spares and accessories.
Could be both. Healthy aftermarket demand plus potentially solid new vehicle sales, especially commercial ones maybe.
And that huge 15.7% in electrical equipment.
Nice.
Items. electric heaters, small transformers, and this one's interesting. End-facing connector for optical fibers and cables.
Ah, okay, that last one's telling.
Right, not just heaters for homes.
No, that points directly to digital infrastructure build-out. Think 5G rollout, broadband expansion, that's a big growth area.
Connects industrial production straight to the digital economy. Fascinating.
Yeah, really interesting linkage there.
Okay, let's switch gears. Look at it from a different angle. The use-based classification helps understand what kind of goods are being produced.
Right. Is it stuff for factories, stuff for building sites, or stuff for us consumers?
Exactly. So for March 2025, primary goods index is 168.2. Capital goods, that's machinery, equipment, 134.8. Intermediate goods, things used in production, 173.1. Infrastructure, construction goods, really high index, 212.3.
Wow. Yeah, that stands out.
Consumer durables, appliances, etc., 138.5. And consumer non-durables, everyday stuff like food, toiletries, 147.9.
So looking at those index levels, infrastructure construction is clearly very active.
Definitely. And primary and intermediate goods look solid too, suggesting the supply chain is humming along.
Capital goods at 134.8. Well, it shows there's some investment happening in new capacity.
Now let's look at the growth rates for these categories in March, year on year. This is where it gets really telling.
Okay.
Infrastructure construction goods, as you'd expect from that high index, grew 8.8%.
Yeah.
Very strong.
Leading the pack there.
Primary goods up 3.1%, capital goods 2.4%, intermediate goods 2.3%. All positive, moderate growth.
Encouraging signs, especially the capital goods, even if it's not huge growth, shows investment.
Consumer durables also looking healthy, up 6.6%. People buying washing machines, TVs, maybe.
Seems like it. Decent growth there.
But consumer non-durables, down. A contraction of minus 4.7%.
Oof. Minus 4.7. That's quite a dip.
Yeah, that seems significant. What could be going on there? Everyday essentials.
It's a bit worrying, isn't it? Could be consumers are shifting spending, maybe towards those durables or services, perhaps. Or maybe just pulling back slightly on some non-essential everyday items.
Or maybe inflation is hitting budgets for those kinds of goods.
That's definitely a possibility. It raises a flag about, immediate consumption trends, especially for mass market items. Something to watch.
So the report specifically says the top 3 positive contributors to the overall IIP growth in March were infrastructure construction goods,
No surprise there.
primary goods, and consumer durables.
Right. So those are the areas really providing the lift right now. Makes the non-durable contraction stand out even more.
Good point. Finally, just a note on the data itself. They mentioned that the figures for December 24, January 25, and February 25 have now been finalized.
Yeah, based on more data coming in. That's standard procedure.
And the response rates look pretty solid. March Quick Estimate had an 88% weighted response rate.
And the finalized months, December to February, are even higher, around 94, 95%.
So that gives us confidence in the numbers, right? They seem robust.
Yeah, high response rates mean the data is likely quite representative of what's actually happening out there. It's important for accuracy.
Okay, so let's try and bring it all together. What's the main takeaway from this deep dive into the March IIP?
I'd say moderate, but importantly, continued growth overall. India's industrial output is still expanding.
Driven by specific strengths, it seems. Basic metals, autos, especially electrical equipment, doing really well in manufacturing.
Right. And then on the demand side, that big push from infrastructure and construction is clearly visible. Plus, decent demand for consumer durables.
But with that notable dip, that contraction in consumer non-durables, that's the caveat, the trend to keep an eye on.
Absolutely. It paints a picture of an economy with strong infra investment, some manufacturing bright spots, but maybe some pressure on everyday household spending.
So for you listening, maybe think about how these trends, strong infra, durables, weak non-durables, connect with what you see happening more broadly.
Yeah, how does it fit with other economic indicators?
Yeah.
GDP forecasts, inflation numbers, market activity.
What might these figures be hinting at for the next few months? Where might the Indian economy be heading?
It gives you a base, doesn't it? Will infras keep driving things? Will manufacturing broaden out more? And what happens with that consumer non-durable spending? Lots to think about.
Definitely food for thought. Now, before we wrap up, the usual important reminder.
Yes, the disclaimer.
The information provided is for educational purposes only and not financial advice. We're not SEBI-registered advisors. Investing in stocks carries risks, including potential loss. Consult a SEBI-registered advisor before deciding.
And we are not liable for any losses from decisions based on this information.
For more unbiased market updates, please subscribe to Bull Bear Buzz Podcast.